Hi, Peter Jones, Chartered Surveyor, author and property investor. And over the last couple of videos we've been thinking about how to refurb our properties and add value. And in this video we're going to think about how to finance and pay for our refurb project. And there are so many different options available. It's one of those subjects which we could actually make a whole series of videos on, just talking about how to finance. So I'm going to try and keep this short and to the point. So let's get started. Well, one of the first ways and primary ways that you're going to finance your refurb project is probably through an ordinary vanilla buy-to-let loan. Now, there's a few things that we need to be a little bit careful of. Firstly, all of the buy-to-let lenders have slightly different criteria as to what they consider to be acceptable for lending purposes. We'll come back to that. We've then got to add into the mix that every valuer who goes out to do the valuation for a buy-to-let company are going to have their own views on whether a property is lendable or not as well. And what the banks are looking for, the buy-to-let lenders are looking for principally, is that the property is habitable from day one. Why? Because they want to know that if they had to repossess you and take your property back off you, that the property would be saleable, that it's in a condition where if it rents out, they could probably sell it. That's all they're concerned about. So buy-to-let lenders want to know that the property is habitable from day one, but the definition of habitable will vary from lender to lender. Some are very, very strict on it, where they basically won't allow you to do any kind of works to the property at all, whereas others are much more flexible, and as long as there's kind of like running water and electricity connected, then they're quite relaxed about it. So this is one of the reasons why you need a good broker, because a good broker will be able to take you to the right lender for the project that you're trying to do. Now, as I say, add into the mix that different valuers will have a different interpretation of what habitable means as well. And so it's a little bit as a potluck as to whether your lender's going to lend to you if the property requires a significant amount of work. That's why I like to keep my refurbs just to a new kitchen, new bathroom, windows if I have to, maybe updating or installing heating. Generally speaking, one can get away with that, and the buy-to-let lenders are usually okay with that. Some will be very okay with it, one or two will be not at all okay with it. Get a good broker, they will help you. So, assuming that we can buy the property using a normal vanilla buy-to-let loan, we'd do the works. And then after 6 months, because there's what's called the 6-month rule, which I won't go into now, but effectively you can't finance or refinance a property until 6 months after you've bought it or since the last financing. Once the 6 months is up, then we will finance the property. Now, you've got choices then. You can either go back to your original lender, the one who lent you the loan to buy the property, or you could borrow from a completely different lender. The advantage of borrowing from a completely different lender is that hopefully they're going to send out a different valuer, and that valuer is going to be more inclined to accept that you've increased the value of the property. Now, I know this sounds a bit daft, because if you've done a refurb, you genuinely have increased the value of the property, and that should be self-evident. But valuers are a very cautious breed by nature. And if the previous valuer came out and said, for example, your property is worth 75 grand, notwithstanding the fact that you've spent 20 grand doing it up and it's now worth 140, they're probably going to say, well, you know, I only valued it at 75 grand 6 months ago, so the most I can put it on is 100. Very frustrating if you know from comparable evidence and from sales in the area that the property genuinely is worth £140,000. At this point, I could have a complete rant about the system. I won't. Let's keep to the subject. So that's one option, is to go back to your previous lender, or second option, go to a new lender so that you get a different valuer, hopefully, who will come out and say, yeah, sure, fair enough, it's worth 140,000, whatever the figure is, taking into account the works you've done. How else could you finance your refurb? Well, I wouldn't be averse to using bridging originally, particularly if the property needed a lot more work, which meant that for buy-to-let purposes it was uninhabitable. I'd be quite happy to use bridging if, and this is the big proviso, if I was confident that I could exit onto a normal buy-to-let loan afterwards. And this is again why you need a good broker to help you with this, because if you can exit onto a buy-to-let loan, and if you're doing the proper works and there's a property in the right area, there shouldn't be a problem with that, by the way. But you just want a little bit of reassurance, because you don't want to get stuck on bridging when the 6 months or 12-month bridging period is up and you haven't paid the bridgers back. You will get hit with very high fees and penalties. But it can be a great way to get you into doing refurbs. The last way we're going to think about in this video is light refurbishment loans. Now, light refurbishment loans are great because what they are is effectively a bespoke finance package for doing refurbs. And what will happen is the bank will send the valuer out when you buy the property. The valuer will value the property in today's condition, but will also value the property in its future condition, assuming that you've done the works to bring it up to standard. In other words, the valuer will give you the valuation of the property once the refurb is done. What will then happen is that the bank will lend you money today. They'll usually add a bit of hold a bit of money back, what we call a retention, until you've done the works. But you may get perhaps 75% of the current value less a percentage for the retention. Then when the works are done and you've brought the property up to standard, the valuer will go back out. They'll confirm that you've done the work to the required specification and to the required quality. They'll then confirm their valuation of the property in its new condition, and then the bank will then give you 75% or whatever the loan to value ratio is that they're offering you of the new improved value. And they'll pay you the extra money, and they'll pay you the retention which they held back, which the retention is basically just a sum of money they hold back just to make sure that you do the works. That makes it so easy. Now, the great thing is if you're in London, the southeast, if you're doing properties maybe south of, well, let's say Leicester, this probably works quite well because the banks and the building societies which do light refurb loans tend to have a minimum valuation nowadays of £100,000. If you're north of a line of, say, Nottingham, and property value is a little bit cheaper, and that's the type of property you're going for, it's going to be harder because the minimum valuation tends to be £100,000. So you need to think about this and shop around. If I couldn't get a light refurbishment loan, I'd certainly think about using bridging. And a product which I'm very interested in, I have to be honest with you, I've never used it myself, but I know people who have, who say it's a very good product, and I don't usually plug individual lenders, but I'll just throw this out there because it's a useful tool, is a product offered by Precise Mortgages, which is called a bridge to let facility. What they'll do is they'll lend you the money while the property is uninhabitable and while you're doing the refurb, and they'll effectively charge you a bridging loan rate, although it's actually cheaper than most bridging loans. Then after, I think it's 4 months, they'll switch you onto a normal buy-to-let loan. So you've got the whole thing all wrapped up in one package. Could be very, very useful. So there we are. There's a few ideas on how to actually finance your refurb projects. If you're interested in refurb projects, you might be interested in my ebook, The Successful Renovators Workshop, which you can find links to on my website, thepropertyteacher.co.uk. Here's to successful property investing.